There are many links between the currency markets and commodities, from the impact fluctuating currencies can have on the price of wheat or grain and therefore food prices, to the much discussed relationship between the price of gold and the value of the US dollar. Joining me today to give his exclusive insight on commodities is Sullenger, founder and managing director of GAIA Capital Advisors, who specialise in commodities, agriculture and natural resources. So thank you very much for joining me, Coast. Now, GAIA specialise in soft commodities and agricultural investments. We often hear about the relationship between hard commodities and precious metals and the currency markets, but is there a relationship at all between soft commodities, agriculture, food prices and the currency markets?
Well, I would say there is. To a lesser extent than there is with gold. Obviously, precious metals, especially gold, have had this historical relation where if the dollar went up, gold would go down, and inversely is the case. And in the last couple of years, we saw that relationship also with the euro. As the euro started having its own issues, actually gold reacted positively, to the euro weakness. But if you look at the soft commodities, I think it's also somewhat true because they're all priced in dollars. So somehow, if there's dollar weakness, that could also bode well for those commodities. I think generally commodities are a play against currency debasement. Of course, you get more. Let's say more of a direct play when you invest in gold than soft commodities, vis-a-vis to the currencies.
Now, I know GAIA is especially involved in agriculture and food production. There's obviously a big debate about food prices at the moment and about the need to increase food production. The FAO say they need to significantly increase food production. How does that impact your investments and your business?
Well, you're absolutely right. The outlook for, let's say, the demand of food products is quite robust. If you look out to 2030, the FAO is saying we need to grow food production by as much as 50%. And if you look out to the year 2050, that food production globally has to grow by as much as 80 to 100%. So we're looking at the consumption trends are extremely robust, especially in places like Southeast Asia. So that bodes well for the industry, for food prices. Just means there's much more demand, and it is difficult for the production to keep up with this growing demand. Because if you look back, over the last 40 or 50 years, most of the increases in production have come through technology increases. So we've driven up the harvest yields on the land that we're harvesting, but we didn't really grow the global land bank.
On oil, very influential obviously in financial markets, there has been a debate recently that with Libya hopefully coming back into oil production, that the price may go down, but demand remains quite high. What in your opinion, is the main driver of oil prices?
Well, first of all, you've got this big difference between WTI and Brent, but let's just the oil complex, apart from natural gas, which is quite weak now because of the huge production coming out of the United States through which is driven by the new gas fracking techniques. Generally, you've got a pretty healthy situation, I think, in the oil market today, where you have something around 5 million barrels of spare capacity. Of course, some people question whether that's really the right number. But if you look back to 2008, we had a period which was very critical, where the spare capacity was around 500,000 barrels, actually. So, in terms of capacity and inventories, I think we're in a pretty healthy market. But if you look forward, the consumption trends are also quite strong. And I think that's why the oil price, is staying at these high levels. Okay,
let's turn to gold now, and I think we can look at a couple of charts actually. So obviously, firstly, since the beginning of the year, we can see all these record highs we saw in the gold price. It's sort of a significant rise since the beginning of the year. Since beginning of September, though, obviously, the price has come down a bit, but it seems to be steady now. Do you think the top of the market for gold has been reached, and where do you see the gold price going in the future?
I don't think the top of the market's been reached at all, because I see gold as a hedge against, again, going back to the currency debasement. Basically, I think gold is a neutral reference point, and you have to look at it that way. That gold is a stable reference point. It's a currency of sort that has no debt behind it. And if you look at what's happening today in Europe and the United States, we've had QE1, QE2 in the United States. We've had, we've had all sorts of, let's say, stimulus packages in Europe, and you have a very, the debt levels have gotten to a very critical point where in many countries you have debt total debt to GDP, which is running at over 100 and sometimes 200, even 300%. So, we have to deleverage. That's clear to everyone. And I think that today you also have, in addition to that, this currency war where everyone's trying to drive their currency down in a competitive currency battle. So I think that all bodes very well for gold. I think gold is going to continue to survive or continue to thrive in an environment where there's going to be a loss of confidence in currencies backed by indebted governments, let's say, that have to inflate or to debase their way out of this indebtedness.
How did some of those high rises that we saw in the gold price affect other commodities and sort of the businesses you're dealing with?
Well, it didn't have a tremendous impact, I would say, on other commodities per se, but the fact that the gold price ran up obviously pulled the gold shares along with it. But the problem happened starting in July and August with the weakness in the markets, actually, that gold equities for the last 6 months, in fact, have produced a big gap in performance between the gold shares and the gold equities, where the gold equities have grossly underperformed the underlying gold price.
That's all we have time for today. Thank you very much to my guest, Sullenger. Stay tuned to Dukascopy TV for more exclusive insight and analysis, including a more detailed discussion on gold on Thursday. Goodbye.